If you're tired of watching your trades go south, listen up. I totally know how overwhelming it can be trying to find the perfect strategy for your specific stage in trading. Today I'm going to break down 5 trading strategies that I've also personally used and I know are going to work for you too. Whether you're a total beginner or intermediate, all of these strategies are going to work for you. Specifically, the first 3 strategies are going to work for total beginners, and the last 2 strategies that I personally also use are for a little bit intermediate. The first strategy we're doing is the trend following strategy. This is basically when you trade with the trend instead of against it. Firstly, you identify the trend. Open your chart and look for higher highs and higher lows in an uptrend, lower highs and lower lows in a downtrend. Use the trend line or the 200 EMA for extra confirmation. Step 2 is your entry point. Enter a trade when the price retraces to a key support level in an uptrend or resistance in a downtrend. Wait for the bullish candle in an uptrend or wait for a bearish candle in a downtrend to confirm your entry. Step 3 is setting your stop loss. Always place your stop loss below the last swing or the last low in an uptrend or above the last swing high in a downtrend. I know it sounds complicated, but I'm going to clear things up after I show you how to do it live. Now for the trend following strategy. So here's everything where I'd enter. As you can see, this is a bearish market condition. And these are the ideal entry points, I'd say. And I did also catch this move right here. Here's proof for it. I think made like 6 euros from that. So as we can see, this was a bullish price movement. And I entered right when it went down, made the higher low. So over here I entered, and yeah. Next, we're moving on to the breakout strategy. It's perfect for catching those explosive moves. Step 1 is you identify key levels. You look for areas that have a lot of consolidation zones where price is basically stuck, and you draw the support and the resistance line around those levels. Step 2 is you wait for the breakout. You enter a trade when the price breaks above the resistance or below the support with volume. Volume is key, so check for a spike. Step 3 is manage your trade. Set a stop loss below the breakout point to minimize risk. Thirdly, we are moving on to the moving average strategy. So this is where you use 2 moving averages, one short term and one long term. Step 1 is obviously setting up your moving averages. So you usually use 2 moving averages. One's the short term one, like the 9 EMA, and the long term one, which is the 50 SMA. Step 2 is you look for crossover. A bullish crossover happens when the short term MA crosses above the long term MA. A bearish crossover is the opposite. This signals a potential trend change. Step 3 is trade confirmation. Wait for a candle to close below or above your moving averages before entering. And now we're moving on to live. So now for the moving average over here. As we could see, the cross happened right over here. And that's where I was like, should I enter? Should I not enter? And I did end up entering, which definitely was a good thing that I did because it ended up going into profit. And I think I made 3 or 4 euros from this. And it definitely went into profit. And here you can see kind of like every time it kind of crosses up, it usually does go up. And every time it crosses down, it usually does go down. Now let's get into the retest strategy. It's basically when you make sure that it comes back to the level where you would have originally entered, but it comes back to the level and then goes up. Or same goes the other way around with sell. So basically it breaks out, it goes back, retraces, and then goes back. So step 1 is after a breakout, wait for the price to come back to the breakout level, and this is your perfect entry point. Step 3 is setting the stop loss. Place your stop loss below the retest point. And now I'm going to show you live. So now for the retest strategy, this is the New York Eastern opening time. So I marked this level out and it came back to this level, went up and retested kind of, as you can see right here. And since it retested, I was like, I should probably enter for a buy, which I'm very happy I did because it ended up going into profit. And I just want to raise your awareness that not every retest is going to be totally perfect as people show it on YouTube and everything, because sometimes it does end up going a little bit into the level or inside of the level before striking up or striking down. So I just wanted to make that clear, and let's head on to the next strategy. Finally, we have the RSI strategy. This used to be my favorite strategy back in the day. So step 1 is set up the RSI. Add the RSI indicator to your chart and set the levels 70, which is overbought, and 30, which is oversold. On the 70 level right now, the RSI is on the 70 level. You would potentially look for confirmations on the downside, and if it's on 30, or basically on the levels of 10 to 30, you would look for a confirmation of it going up, so you can enter for a buy. Now for the RSI strategy. As we can see, this was a bearish move, and on the RSI it was showing us that this was overbought, which kind of indicates that it is going to go down, and this is where you would enter for a sell typically, and the price ended up working out to the way we expected. And right over here, as we can see, this showed us that it was oversold, and since it's oversold, you usually buy. Oversold equals buying, and if you would have bought right here, you would have made a lot of profit, as we can see, because it did end up going up the way we expected, and the RSI indicates whether it's overbought or it's oversold. So there you have it, the 5 trading strategies that work very great and even I've used, and I hope this video provided some value. Keep learning, stay disciplined, and remember, every mistake is a step closer